Hey, how's it going, everybody? Welcome to Finance with Avern. Today, I'm getting into the recent stock market crash that shook up things on Monday, August 5th. It was a wild ride, but as I know, and as you hopefully know, every crash presents an opportunity. In this video, I'm going to walk you through briefly the stocks that I scooped up during this dip and why I believe these stocks are poised for a strong comeback. And actually, most of them have already started to rebound nicely in these past couple of days. The market has been up overall nicely. But yeah, on Monday, August 5th, the market was definitely down. The VIX volatility index went up to levels that we haven't seen since the COVID crash. I'm going to show you screenshots of my actual purchases. And briefly, I'm not going to go into too much detail about why the market crashed on Monday. A lot of you probably already know. You've seen the headlines, you've seen the news articles. I'm showing you them on the screen. You've been seeing them throughout the intro of this video. There was several things going on in the market. One of the main reasons why the market crashed on Monday, briefly, is because of that Japanese yen pair trade. Basically, people were being able to borrow money at 0% for a long time. They would take that money, put it into the stock market, or put it into something else that's going to yield them more than 0%. And then Japan raised the borrowing rate for the yen, and that caused people to panic, sell out of the investments they had made with that borrowed money. And it was just kind of like a whirlwind right there. So that definitely escalated. You also have things going on with the wars and violence around the world, and the presidential election coming up, uncertainty about this, the economy, the jobs number on Friday that shook things up. And I actually made a post on some of my social media outlets out there and just kind of stated hey, embrace the volatility. You see it on the screen right there. I was like, embrace the volatility. And I just show people this briefly, look at the correlation of the VIX volatility index in the stock market. I'm not saying this is always guaranteed. This is definitely one for one, but this is one of the things I definitely look at. You can see there's a lot of bearish activity. There's a lot of panic going on. And you look at the S&P charts, you look at the Dow charts, look at the NASDAQ charts, and what do you see? The market is down often on those days in those time periods where the VIX has spiked. So that's just something to keep in mind. I posted that on a couple of places. And on Monday, actually, I text several people that I talk to about the stock market and stocks in general sometimes. And I just said hey, look at this VIX volatility index. And they're just hey, I'm buying. Just not financial advice to them, not financial advice to you all watching the video, but I'm just saying this is what I'm doing, So this is why, part of why. I look at the fear and greed index. I made a video on that. I'll link it down in the description, the CNN fear and greed index. So I use that. I use the volatility index, different things I use to kind of tell me hey, this is a good time to buy. And then also just certain stocks price action. Stocks go down a certain amount, and I'll show you when they went underneath 50-day, 200-day moving averages. And I was hey, I'm going to buy some more of this. If it goes down further, that's fine. I'll buy some more, because all of these stocks that I bought on Monday during this crash were stocks that I'm going to continue buying, and they're all long-term positions. Let me make that statement again. All of these stocks I'm talking about in this video are long-term positions. I'm not trying to sell them this week. I could sell some of them and already have a profit. Most of them I was already in. There's a couple of new positions. I'll tell you which ones those are, but I've been in those stocks before. So yeah, but all of these overall are long-term positions. So yeah, without further ado, let's jump into the stocks that I bought on Monday, August 5th during that stock market crash. Starting up here with first, Microsoft. Microsoft is a major company. Look at that market cap. A market cap of $3 trillion. Trillion dollars. Yes, you know who Microsoft is. I'm not going to really give an intro to any of these because all of these are kind of well-known companies and stocks, except for one. Some investors may know it. It's not very well known, but all of these stocks that I bought are well-known stocks. So I won't really get too much into what they do and everything. I just want to show you the price action and some of the financials and things like that. So yeah, Microsoft, major corporation. Microsoft, market cap, $3 trillion. Monday, they took a dive. You see it right here. They were already pretty much underneath that 50-day moving average. I'm going to zoom out a little bit on the chart. So they went underneath the 50-day moving average back in July. You see that? But they were still holding that 200-day moving average. And then on Monday, boom, dipped below both of them. And that's not exactly the reason why I bought. Of course, I bought because it did go to the 400. It did go underneath both of the moving averages that I like to look at, the 200-day and the 50-day. And it's a stock that I don't currently, well, I do now. It's a stock that I did not have a position in at the moment. I have been in Microsoft before. I made a mistake with Microsoft years ago. I got into Microsoft back when it was 2 digits. Years ago, and it sold out after it went up some, but that was one of the biggest mistakes I ever made. And with Microsoft, they're down about 13% in the past 3 months, down about around 1%. Year to date, they're up around 7.8%. Of course, you zoom out some more, 3 years up 40%, 5 year up around 194%, max, okay, yeah, it's just crazy, up over 427,000%. So yeah, all right, Microsoft. All right, so Microsoft. I started my first buy of Microsoft at $395.13. And then I was just kind of watching it throughout the day. And it went down a little bit, went up a little bit, back and forth. And so I bought more at $394.23. Still watching it, still a stock I want to keep building a position on. I'm not done building my position on Microsoft. Far from it, definitely. And then a little bit after that, bought that at 394. I jumped in again and bought some more Microsoft at 393.50. So 3 times I bought Microsoft on Monday, August 5th. So definitely, and as you see right now, the stock price for Microsoft is over $400. It's at $404.02. So I'm already up on that stock a couple of percent. But like I stated, I'm not like trying to get in and get out. This is a long-term position and I want to buy more Microsoft. I really, at these levels it's at now, I'm going to still kind of scoop up some here and there. I like that it's still underneath the 50-day and 200-day moving average. If we go down some more, I'm definitely going to increase my position on Microsoft for sure. Like, I mean, I'm going to continue anyways, but I'll increase it even more during these dips. And, you know, leading up to the election, leading up to all these other economic events and data coming out, it definitely has the chance and potential to go down more. All of these stocks do. So I'm definitely going to be looking out for it. Keep some money on the sidelines. But yeah, Microsoft, I'll continue putting a little amounts in there. If it dips further, I'll increase those little amounts. So yeah, Microsoft, I want to show you some things about its financials because they are miraculous, fantastic, awesome, all of that. Yes, meow. You heard the meow be in the background. That is Jennifer, my cat right now. But yes, one of my cats. But yeah, so you see the income statement right here at Microsoft. I got it broken down quarterly. See the double-digit gains in revenue growth? Look at that increase right there. Operating income holding nicely, going up. And I just want to show you briefly the financials of all these companies. Most of them, the financials are great. There's one company that's kind of in some areas. Then another one is, but like overall, like most of these, like yes. And look at the total assets of this balance sheet right here, growing nicely. And they could pay off their debt just like that. I had to snap away from the microphone. I didn't want it to pop in your ear, but like they could just, yeah, their debt's nothing. So with how much they make, you saw how much they make. So yeah, Microsoft. Good grief. Let's look at the forecast right here. 34 analysts with a 12-month price target. Now, this is not something I say like, hey, always listen to the analysts. They're always right, because that's definitely not true. And me neither. Like 34 analysts, 12-month price target. They have a high price target of $600. The average price target is $492.38. So yeah, much higher than where it's trading at now. The low price target, they do have one low price target of $375, and we were in those 390s not that long ago. So, you know, not that far from the low price target, but yeah, high of 600 though, average 492.38. Mostly strong buy overall, more strong buys, one hold, no sales, no strong sales. And there's some information on the analysts right there. You can see the firm they're with, their rating and all of that. So yeah, and a dividend of Microsoft. I believe all of these stocks except, I'm thinking one. Yeah, all of these stocks I bought except one pay a dividend. Yeah, Microsoft's dividend, 0.75%, not a huge yield, but they're a dividend growth stock because that dividend is going to continue to grow if Microsoft continues to grow like they are. Look at that dividend growth of 10.29%, annual dividend $3. Payout ratio is only 25.42%. So yeah, they are definitely not like, you know, paying out a lot of their money they make towards the dividend. They could definitely increase that dividend yield and not really bother them, you know, at all. So yeah, 19 years of dividend growth. Very nice right there. So Microsoft, that is Microsoft. One of the main stocks I say I bought on that Monday during that crash. Like I say, I kept going into it, went into it 3 times. I will continue. Microsoft, ticker symbol MSFT. Microsoft, like I stated, this is a new position. Next stock I want to talk about is another new position for me. I've been in it before, but that position would be in Amazon, ticker symbol AMZN. On August 5th, it went down underneath that 200-day and 50-day moving average Amazon. So Amazon, you know Amazon. If you know Microsoft, you know Amazon. $1.71 trillion market cap. Yes, massive company. And a lot of people know Amazon, of course, from Amazon.com, shopping on Amazon. They're like one of the leaders in online shopping. Like they have been this major part of this online shopping movement. Amazon also makes a ton of money from AWS, the cloud service. Same as Microsoft as well. Microsoft, you know Microsoft software, they make a lot of money from that, and they got their gaming division, all of that. But they also have the cloud that's making a lot of money as well. So yeah, these are 2 major cloud plays. There's another one coming up later on this list right here after this stock actually. And Amazon for the month down around 16.5%, 3 months down around 11.5%, year to date up around 9.4%, for 3 years down about 1%, 5 year up around 75%, Max, ridiculous, up over 223,000%. So yeah, Amazon. I want to show you some of the financials for Amazon as well. I got it up here quarterly, the income statement. Check it out. Double-digit percentage gains in revenue growth. Very nicely, Amazon is growing. Gross profit, look at it, nicely. And let's go over, look at this income statement. They make so much money. These companies, wow. All right, balance sheet. Let's get to the total assets. Total assets growing. You see, that's nice. Let's look at the liabilities. More assets than liabilities. Very nice. I like that. Nice, clean balance sheet. Microsoft, nice balance sheet. Amazon, nice. Next stock I'm going to show you, very nice. Stock after that, wow. Like, there's some nice balance sheets and income statements on these stocks. I mean, wow. Amazon does not pay a dividend. Not yet. Now, it's kind of been like I won't say a trend, because the past couple of years, there's been some big tech companies that started paying a dividend, initiated one. Was Meta and Facebook. They started paying a dividend. And also, what was the other one? Google, Alphabet. They started paying a dividend not that long ago. So they joined the ranks with Microsoft and Apple, two major tech companies that pay a little nice dividend. So Amazon, you're up next. A lot of people say, I don't pay a dividend. Put it all to growth, put it all to buybacks. You can do all three. Like, really, you don't have to just do one. I mean, like, companies, there's very smart people working at these companies. They know what to do. I'm not going to say, hey, they should do this, they should do that. They know what they can do, want to do, will do, what benefits them, the shareholders, all that. Usually. The forecast right here, you got 42 analysts, 12-month price target. Like I stated with Microsoft, this isn't something saying like, hey, the analysts are always right. This is where the stock is going for sure, all that. But yeah, something I still just like to look at. Strong buy on the analyst consensus. High price target of $251. Currently, stock, you see, 166. Average price target for the analyst, 42, 12-month, $219.12. So higher than where it's at currently for sure. And the lowest price target they have is $145. So not that far from that low. Strong buy consensus overall. More strong buys. Then you have buys. No holds, no sales, and no strong sales currently for the analyst ratings. Those are analysts right there. Some of the analysts and the firms they're with right there. Revenue growth. Look at the revenue growth. Earnings per share growth. Just very, very nice. Very nice. Yes, that is Amazon. I'm going to continue putting small amounts into Amazon, just building up my position. If it dips down further, I will increase those amounts for sure. Amazon, long-term hold for me. Now let's get to the next stock that I have had a position in that I increased on Monday. That is Alphabet, Google, ticker symbol GOOGL. Also ticker symbol GOOG. The one that I hold is GOOGL. So that's the one I'm buying. That's the one I'm showing. And it's basically just a difference in voting rights and things like that. And as you see, I'm going to zoom out on here. So yeah, it's below its 50-day moving average, but it's not below its 200-day moving average. So that's something right there. And towards the 52-week range with Alphabet, kind of towards the middle, similar to Microsoft and Amazon. They have a high of 191.75, a low of 120.21. So yeah, kind of towards the middle. Average price right now on Alphabet Google is $150.46. So yeah, it did increase as I was making these buys because it was lower than that. But you see the levels I was buying it at were higher than my average. So it's gone up some. I believe when I started, last time I looked at my average, I think it was at around 136, 130 something average per share with Google Alphabet. But yeah, it didn't go down lower than my average, but it went down enough for me to continue buying. And I jumped back in Monday. Well, before Monday, last time I bought Google was back on July in the 160s. But on Monday, I bought some at 159.33, and then I bought some more at 158.86. And actually bought some more on that Tuesday, August 6th at 158.58. So this one is up since when I bought it. It had, like I said, a little bumpy road to get there, but it's still down in the past month, down 13%. Past 3 months, around 3%. Year to date, though, Google is up, Alphabet, about 16.9%. But yeah, so it's higher than where I was buying it on Monday. Am I selling? No. Am I holding a long term? Yes. Definitely long term for Google Alphabet with my position currently, and I will continue adding to it. So yeah, just want to show you right there on the screen and tell you about the prices that I was buying it at on Monday. And Google Alphabet for the month down around 13.5%. 3 months down around 3.5%. Year to date up around 16.9%. 3-year up around 20%. 5-year up around 174%. And max, yep, as you guessed, they were like the previous two stocks, up 1,000% over 6,000% for Alphabet Google. And that market cap, Alphabet Google, $1.97 trillion, another mega tech stock right there. You know, Alphabet Google, right? You know, yeah, search giants, search wizards. Their name is a verb. People use it. Google. I don't even hear people say I'm going to search for it. Say I'm going to Google it. And YouTube it. People say I'm going to YouTube it too. YouTube is like the same kind of wordplay as Google, pretty much. I'll YouTube it. I'll look on YouTube. You know, like there's YouTube. People even call just a video a YouTube. Like, you know, like, so yeah. And that's like, I think like the second largest search, like after Google, like YouTube is the next search engine or something like that. So yeah, massive, massive company. And they have the cloud as well, you know, and they have the cloud as well. I want to say it like I was on the cloud. So yeah, they have the cloud as well, and they are growing. Let's check out the financials on Alphabet, because yes, they are lovely. Look at the income statement right here. The growth, double-digit year-over-year revenue growth. Gross profit growing. Nice, nice, nice. Let's look at the balance sheet here. More assets than liabilities. Another one of those stocks that could just pay off that debt just like, meh. Let's check out the analyst forecast for Alphabet. Here, 38 analysts, 12-month price target, average consensus of buy. The 12-month price target, a high of $240. The average is $197.71. So right now it's trading below that average and below that high, and the low price target of $129. And with the analyst ratings, a little bit more of a shakeup here. There was recently actually some news with Google and a lawsuit that's going on saying that they're like an illegal monopoly with the search and things like that. So there's some kind of like some negative news out there for sure with Google Alphabet. You see it on the screen, just kind of putting up the articles there. Right now they're defaulted. They have a deal with Apple where they default as the, you know, search engine you use. In the US, I believe in Europe, they have it where they ask you like, hey, would you rather have? And that also may mean that Google won't have to pay Apple as much money to be the default search engine on their platforms and devices. So that's something to think about there too. That maybe this will be a win-win somewhat for Google, maybe not. Yeah. But yeah, we won't dive too much in that. Analyst ratings right here. Strong buy, 14 of those. A buy, 17 of those, and 9 holds right here. No sales, no strong sales. Analysts right there and some of the firms, and they've been beating on revenue, beating on EPS, earnings per share growth. Now let's check out the dividend. Alphabet recently did start paying a dividend, like I was telling you when I was talking about one of the other stocks here. They have a dividend yield of 0.50%, 80 cents a share annually. Payout ratio of only 11.48%. So barely a payout ratio. They definitely have room to continue growing that dividend. So one of those, you don't necessarily maybe buy for the dividend, but I would definitely put this in the basket of dividend growth stock. Dollar cost averaging for sure will continue with Alphabet and Google at these levels, around these levels. And if it goes lower, I'm going to increase that dollar cost averaging amount. All right, so yeah, that is Alphabet, Google. Let's get to the next stock that I bought on Monday and increase my position in, and that is Meta Platforms, also known as Facebook, also known as the owner of Instagram. The market cap on Meta Platforms is $1.28 trillion. Trading more towards the higher end of a 52-week range, high of 542.81, low of 274.38. And Meta Platforms only went in with one buy on Monday. Should have definitely done more because I went in my buy on Monday at $469.04. And as you see currently, it's above $500. So yeah, it definitely went up since then. And my average cost though on Meta is actually $474.11. So it's higher than my average cost. Still up around 6%. Meta is another stock that I held before, got out of, sold it, and then came back into it. So where was I buying Meta Platforms? In this area right here, around the 200 area, as you see on the screen. And yeah, I should have just held, but no, I started selling once, you know, it dipped down lower, and I was like, oh, wow. I didn't sell down here. But around here and stuff like that. So yeah, should have held on more longer. Of course, look at that, ridiculous. But I'm back into Meta Platforms, Facebook, currently trading above the 50-day and 200-day moving average. On that Monday, though, it went below the 50-day moving average nicely. But for the past 3 months, right here, Meta Platforms up around 6.9%. For the year, up around 61%. For the 3-year, up around 38%. 5-year, up around 168%. And a max of over 1,500%. The financials for Meta Platforms, it's amazing. Yeah, no, I had to take a pause. Like, I'm not even going to edit that part out because just looking, and I've already looked, and just thinking about them, I've been we've seen some great financials, haven't we? We've seen some great financials with these companies. And then Meta Platforms, wow. Like, it doesn't make me numb to it seeing these great financials, because I've seen balance sheets and income statements that are not, so yeah, look at the year over year, look at the revenue growth right there, double digit percentage, not just teens though, 20 something percent, 23, 24, 27. Wow, they make a lot of money effectively, as we'll say about Meta Platforms. Let's check out the balance sheet here. Total assets, nicely right here. Look at it, nicely. We got to see next the total liabilities. Once again, way more total assets than total liabilities. Debt, meh, a little bit, meh. Once again, you notice a trend with these 4 companies in a row? Yes, definitely. Wow, Meta Platforms. Get over to the forecast. You got 39 analysts right here. 12-month price target forecast. The high of $647. Average of $556. So right now, currently still trading below the average. A low right here down to $350. So for the analysts right there, you have mostly strong buys. 20 of those strong buys. 17 of the buys. 2 holds and 2 sales on this one. Actually, it's the first of the stocks right here that I bought that had actual sale recommendation for 2 analysts. Some of the analysts and the firms are with nice revenue growth and nice earnings per share growth as well. Meta Platforms, another position of mine that is, like I've stated for all of these stocks in this video, all of these are long-term positions, and I will continue buying all of these stocks. And if it goes down further nicely, I will increase how much I'm buying for sure. That is Meta Platforms, ticker symbol META. On to the next one here. Next stock I bought on Monday, the doom and gloom day of August 5th, Monday, is Target. Ticker symbol TGT. Target, as you see on Monday, took a dive as well, down in the lower 130s, and it's still kind of not getting from that. It's still in a slouch. Now, this is the first company on this list right here that you see that didn't really pop up some, like a little bit nicely. Like the previous 4 stocks, they're all been trading green the past couple of days. Target, meh, barely today, up, like 4.45% as I'm recording this. So Target, 52-week range, trading towards the middle, more towards the lower end right there, has a low of $102.93, 52-week high of 181.86. So on the middle kind of that, but towards the lower more than the higher. And yes, Target, Target, major company as well. Not as big as those other previous companies I'm talking about. Not $1 trillion value, not $1 trillion market cap, but still a big market cap of $62 billion right here. Target, you see the logo, you know it, you drive by it, you online order, you may shop there, your significant other may shop there, you both may shop there, you may hold hands there, you may whatever there. Seriously, like, because Target is like a place I feel like some people go just to kind of hang out, and then they end up buying stuff, or they go for a couple of things and then they say, hey, I need to get a buggy. You got Starbucks in there, you got CVS in there, you got Ulta Beauty in there. It's like a little mall. Target on Monday, I bought it a couple of times here. Started off at 133.60s when I first bought it at. Then I bought up some more at 134.71, and then I bought some more at 132.83. And then actually on August 6th, it was down still, while the other stocks kind of made a bounce back that next day. I was like, oh, let's see where else I'm at. Am I down on any other stock? Target's still down. So I bought some more Target on that Tuesday at 133.50. So as you see, they're still kind of meh. Maybe I shouldn't have bought this one as much. Maybe I should have bought some more of the other ones instead. But yeah, Target, like I said, Target is in the same realm with the other stocks for me. It's a long-term position that I want to continue increasing and holding long term. For the month, Target is down around 9.9%. 3 months down around 16%. Year to date down around 5.9%. 3 year down about 48%, 48.48% down for 3 years right there. 5 year up around 62.67%. And max over 4,000%. They definitely had that shoot up right here of COVID, the COVID crash, and they shot up right there really nicely, and then they've retreated. And did not shoot up. Some stocks had shot up, retreated some, and then shot back up. And just for instance, Microsoft. So Microsoft dip right there, shot up, post COVID, nicely, retreated some, and then continued to just explode upwards. Amazon, wow, definitely increased from that 2020. Shot up very quickly right there. Boom, boom, boom. Sustained and held, retreat, and back up above where it was at. Now, let's get over to some of the financials with Target. Doesn't look as nice as the previous 4 companies, but it's not bad. So yeah, income statement here. Yeah, got some income going on. They make a lot of money as well. the growth isn't there. This is the first time we're seeing not the double digit. We got in the hype, right? I was hype. I'm gonna have to calm down some because the previous companies were like nice double digit revenue growth. It's so much green, so many numbers increasing, you know. Now this one target right here is it's not horrible. It's not horrible, but they're having a little rough patch. They're still going through a rough patch somewhat. It's kind of, I'm not comparing them to the previous four companies because those are tech companies. Those, you know, better margins. They have definitely different operations than a retail, you know, very different. I would not compare them in many aspects, but yeah. And here's the balance sheet right here. Total assets right here. Nice. Let's look at the total liabilities. Okay. Still more assets than liabilities. So that's what I want to see. That's what I like for companies that I own. Now, is it as much as we've seen? I said I was going to stop comparing. Let me stop right there. Let's not even mention that. But yeah, so total liabilities are close to total assets. Is what I'll say for that. So, but not above and not super close. But yeah, still more assets than liabilities right here for target. Let's get over to the forecast. You got 31 analyst forecast right here, 12-month price target, a high of $210. An average of $174.42. So currently trading below that average right there, and a low price target of $116. Average analyst consensus is a buy for this one, and you have 12 strong buys, 7 buys, 12 holds, and 1 sell. So this is a very mixed bag right here with Target. Not a lot of sales, only 1 sell and no strong sales. So you have a lot of people saying just hold it, and you have a lot of people saying let's buy it. So that is the average right there. Here are some of the analysts and their firms. Actually, forecast here, shopping right there. That was not sustainable. I knew that was gonna last. I was like, this is not gonna keep going right here, and it did not. But yeah, we're not at those levels right now. So yeah, but they are trying to get back in the groove. They had some inventory issues, had theft, issues going on, and they had like actual image issues of Target. They had like controversy with some of the things going on with them, so yeah, they had some battles and they still got to get over some of those battles. But yeah, so that is some of the revenue and earnings per share things with Target. Let's get over to the dividend with Target. One of the nice aspects of Target for sure is that dividend yield, 3.31%. Annual dividend of $4.48 right there. Dividend growth 1.84%. Years of dividend growth. They are a dividend king. Target is for sure 53 years of dividend growth. Very nice. Payout ratio around 50%. So not super high, higher than some of the other stocks we've talked about here. Still some room now. They're not stretched too far with paying a dividend. They can keep growing it. I'm sure they do not want to stop that dividend growth going on because that's one of the highlights for Target is how long they've been growing that dividend. So yeah. Very nice aspect of Target right there is that dividend. So yeah, that is it with Target right there though. Another one I will continue to buy. I'm probably going to slow down buying it as much though, because it's one of my top actual 5 positions like Target, because it's stayed down so long and I just keep buying it. But yeah, so I mean that PE ratio is still around 15%, and just I like having a dividend, and some things look good with the aspects of it. Some things are kind of stuff like, man, in a recession, and I know they got to kind of focus more, I believe, on the grocery side, probably more. So, and that's what's been helping Walmart is the grocery side during some of these rough moments in the economy. Target can do that, get away from some of the controversy they've had going on, continue to grow their online presence, and I think they'll be fine overall. But like I said, I don't know the future, don't know holds the future. Any of these stocks could continue to go down, could crash, but I'll continue buying. So yeah, let's get on to the next stock here. Next stock I bought on Monday during the stock market crash of August is Visa, ticker symbol V. And let's just pull up the 5-day chart here. As you see, it is still currently underneath the 200-day and 50-day moving average. And on Monday, yeah, that's where it took that plunge right there, right before Monday. And we'll zoom out even because it came down before that a little bit. Yeah, came down right here, came back up, came down here in July, went back up, end of July, and back on Monday right there, came down. So Visa, 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 you may have Visa in your pocket right now, on your phone in the wallet app, or you may have already used it today. Visa company, large financial credit card company. Visa is everywhere you want to be. I think that's the saying of the logo, isn't it? One of them, something like that. Yeah, Visa. Massive company, market cap of $512 billion. In the middle range of the 52-week high and low. The low is 227, high of 290, right around there in the middle right there currently. For the past month, Visa's down about 2.6%. 3 months down about 6.4%. Year to date down about, barely. Year to date almost flat. And for the 3 year, up about 7%. 5-year up around 44%, and max over 1,000%. Monday, I bought Visa a couple of times. So first I bought Visa at 259.75, then at 258.82, and then again at 254.87. And I liked it down so much on Tuesday, August 6th. It didn't pop up like some of the other stocks did. So I bought more Visa at 256.14. So currently trading around 259. So yeah, it's up higher than most of my buy points on Monday and Tuesday, but not up as much as some of the other stocks, as big tech companies that, I won't say rebounded because they're still low in when you zoom out some, but yeah, they rebounded from that low of Monday. I will say that. So yeah, Visa, now let's check out the financials on Visa. They are nice. I want you to fill in that blank right there. What did you think they were? What did you think they were? Visa, yes. Here is the income statement right here. I got it broken down quarterly, revenue, year over year, though. That growth is nice right there. Got a little double digits back there. And then nice high single digits right there. Very nice still, Visa. And let's get over to the balance sheet here. Balance sheet, total assets. See it up nicely right here. Total assets. Let's look at the total liabilities. Total liabilities, more assets than liabilities. Total current liabilities, you see that kind of sticking around, but look at the total assets, look at the current assets. So yeah, Visa, nice as well. Let's check out the forecast here. 25 analysts forecast, 12-month price target, a high of $330, average of $305.04, which is, higher than where it's trading at currently, around 258. A low of 252, and average consensus of buy. We have 4 strong buys, 17 buys, 6 holds, no sales, and no strong sales. Some of the analysts in their firms right there. And has been doing nicely with the revenue growth and the earnings per share growth. And Visa with the dividend, they do pay a dividend as well, 0.80%. Annual dividend of $2.08. Payout ratio, only 22.27%. Do they have room to continue growing this dividend? Yes, they do. And it would not affect them much. 16 years of dividend growth with a dividend growth percentage of around 15.56%. Very nice. Do I consider them a dividend growth stock as well, like I do with some of the tech companies I was talking about in the video? Yes, I do consider Visa as well as a dividend growth stock. Definitely a long-term position hold in my account, one that I'm trying to build upon, and I believe it's in my top 10. That was like one of my things for the year 2024. I wanted Visa and I wanted Meta platforms to get into my top 10 holdings, and they are both in there, and I'm going to keep them there, which means yes, I'm going to continue buying Visa. And yes, around these levels right here it's currently at, and definitely if it goes down lower, I will be there for it with open hands and open arms. Yes, Visa, ticker symbol V. Now let's get on to the last stock that I bought on Monday, and that's going to be Starwood Properties, a real estate investment trust REIT. Starwood Properties, like I said, this is the one that's not going to be as known as all the other companies I talked about on my video right here. Starwood Properties is a REIT, and they have a market cap of about $6.1 billion. So yeah, the smallest company that I bought on Monday that I'm talking about in this video. They are trading kind of towards the middle of the 52-week range, towards the lower end of that middle. You can say they're a low of $17.07 for 52 weeks, a high of $22.29. And yes, another one of those stocks that on Monday took a dive right there. But have they recovered? They recovered since that Monday. This stock is one of the stocks that has recovered. They went down below their 50-day moving average, and now they're above it. On Monday, bought some shares at $18.62. That was my buy price right there for Starwood Properties. And yeah, I should have bought some more. Because I was kind of thinking like maybe this one will stay down some more. But no, it recovered up nicely. Is this one a long-term position of mine? Yes, another long-term hold of mine. It is in my top 10 holdings, along with other companies, like I stated before, Visa, Meta Platforms, Target, NRG, Apple, Bank of America, Google Alphabet. Oh yeah, Google Alphabet's in the top 10. They've been there. NextEra Energy, yeah, so on and so forth. But yeah, so Starwood Properties is up there with the big ones up there. Yeah, I like the dividend for Starwood Properties. See there, we'll talk about that a little bit more. Let's go back over here. I want to keep this in somewhat order that I've been doing the other stocks. So yeah, for the past month right here, Starwood Property is up around 2.7%. 3 month down around 2.6%. Year to date down around 6.9%. Look at that chart. This looks very interesting though. The highs and lows, like the head and shoulders in here, and yeah, okay, interesting, very interesting how it's been bouncing around the averages and things here. Okay, and for the past 3 years down around 23%. 5-year down around 17%, max up around 21%. So this one, yeah, look at that dive in COVID. They just recovered from that and retraced some. So yeah, this was still kind of hit down. I remember I bought a lot of it around here. That's what my average cost is, where it's at. And when it was up here, and this is not like a huge growth stock. Like I said, it's a REIT. Dividend is one of the main reasons why a lot of people buy REITs, and one of the main reasons why I bought it. And so let's get into some information right here, because not all my stocks can be just growth stocks or growth tech stocks or dividend growth stocks or this or that. Like, they fall in different categories. I like to have diversity in my platform for sure. Let's get over to the financials for Starwood Property. A little bit different right here with the real estate investment trust. You get the revenue here. You got some growth in this right here. You got some moments of just some rough moments right here. Let's zoom out a little bit, kind of somewhat annually, and you can see kind of the jumpy in the revenue right there and the growth a bit. And let's get over to the balance sheet. Total assets right here, you see that, and total liabilities. Kind of close with this one as well. Overall, though, you see more assets than liabilities. Not a big of a gap as the big major tech stocks I was showing you with those beautiful margins, those beautiful balance sheets and income statements. This one right here, not going to compare it really to tech companies, obviously, because of, it's not a tech company. It's a real estate investment trust. It's a REIT. So yeah, this is a real estate stock, and you can definitely tell that from some of the aspects on the balance sheet. So yeah, income statement and balance sheet for Starwood Properties. Let's get to the forecast. I have 7 analysts, not as many analysts as the other companies. 12-month price target at a high of $24. An average of $21.93 and a low of $20. So it's still currently trading actually lower than the low price target, lower than the average, and definitely, of course, lower than the high. And the consensus is a buy on this one. You have 3 strong buys, 2 buys, and 4 holds. The analysts and their firms right here, some of them. And with the revenue growth and the earnings per share growth, you have it growing here. Revenue growth here, even with the earnings per share not growing right here. Jumpy with this one. This one's not as much of a straight lines and mostly greens, or periods of red, then recoveries. This is kind of a jumpy one right here for sure. Was it the best real estate investment trust stock out there? I'm not going to say that. It's one that I got into during the COVID era when it was just down so much, and I was just like, oh, I need to add a real estate investment trust. And I added this one. I also had Realty Income. I held that one for a little while, considering getting back into that one. Not sure, but yeah, one of the main things I like about this stock right here is the dividend at yield of 9.83%, annual dividend of $1.92. Payout ratios with REITs are, let's just call them different. We'll say that. We won't get into too much detail of that, but payout ratios, REITs basically have to pay out a lot of the money they make. So their payout ratios are going to be higher than other kind of companies, tech stocks, retail stocks, and so forth and so forth. So yeah, with all of my dividends, I reinvest it into the company. So this is one of those dividends, when I get paid it just goes back into Starwood Property and buys more shares of it, because I don't need the dividend money right now to live off of or anything like that. So I just buy more of this company, and for the other companies I get a dividend in, I just buy more of that company, and it just grows. My position in Starwood has been growing because I do buy it some here and there, not as much as I buy some other stocks, but that dividend reinvestment keeps it growing right there, which is nice. Starwood Properties, this is a stock that is a long-term position of mine, one that I will continue to grow, not as much as the other stocks on this video right here, because my positions in those, I just want to increase even more. Starwood's already in my top 10. It's been there for a while. It's probably going to go down towards the bottom side. I think right now it's probably like the 7th or 8th largest position in my portfolio, maybe 6th. Something like that. But yeah, it's one of those that it's going to get surpassed by some of the other ones, but I still want to keep it there because I do like this REIT overall. It's not, like I say, a home run hitter in a sense than some of the other stocks on my portfolio, and even the ones I talked about in this video. But yeah, I do want to continue holding this one long term, and I will continue to add to it if it comes down to my average cost, a rare area or something like that, definitely even more so. But yeah, Starwood Property Trust, ticker symbol STWD, is the last stock on the list that I bought during the crash on Monday, August 5th. So those are the stocks I bought during Monday's crash. Remember, it's crucial to do your own research and stay informed before making any investment decisions. This is not financial advice. Just want to kind of fill you on a kind of more of a personal video. A lot of my videos are just like a lot of data and research and lists and things like that. And I enjoy doing those and getting that information out there with those yields on the savings accounts and CD accounts and the cash bonuses, signups, and ETFs, talking about that, and so, earnings from stocks and different things like that. Sometimes I get a little more personal. This video is a little bit more personal, talking about stocks that I bought personally. It's not a deep dive analysis or anything like that. Just a little bit about some stocks that I bought personally. Thought it'd be nice to make a video like this and put it out there. Let me know in the comments below if you are buying, selling, or holding during the dip, or if you have any plans for these stocks. Are they in your portfolio already, or whatever? Leave a comment down below if you like. And some of you may be wondering, why buy during a crash? I always look for opportunities where others see only risk. By focusing on companies with strong fundamentals, I believe these investments will pay off once the market stabilizes and returns more to growth. Some people still say we're in a bull market. Some people say we're in a bear market. Some people say we're going towards a recession. Some people say we're already in a recession. I just want to hold companies that are going to do fine overall. Maybe not as much as when we're in a recession, but they'll hold up some strong. Maybe they'll do decent. And when we're out of a recession, we're a normal economy. What is that? And when we're in a, stabilized economy, or something, we'll say they're doing fine or doing great. They're growing, strong fundamentals. And I can say that for most of the stocks that I bought on Monday. Like I said, there's a couple that got some, some moments there. They got some, but overall, I still have, high conviction long term for those. Maybe not as much as some other stocks that I own, but this is me personally, and for the diversity that I like to have in my portfolio. So yeah, that's it right there. Thank you all for watching the video. Hope you enjoyed it. Take care.